Welcome to the Specialist Trading Weekly Stock Review for the week ending October 8th, 2010. Now, this week's review is going to cover the topic of knowing your strategy because it's extremely important that you know all the rules behind the strategy that you're trading. As you well know, at Specialist Trading we offer you numerous strategies to trade the stock market, anything from a short term to a long term to intermediate term, and we offer these, but it's really important that you know which one to trade. As we always suggest, it's best to go to the video learning section, review all of the strategies, and then just pick one or two that kind of fit in with your trading personality and focus on those ones. And then really know your strategy like the back of your hand. Know where your entry level is, where your different stop placement levels are, where your different exit levels are, and then the discretionary moves that you can apply for that particular strategy. Now this week we had a number of stock picks generated that we posted on the website for you to take advantage of and actually trade or learn from, and we're going to go over all the rules and all the different ways in which you could have traded them this past week. But before we begin, as always, we ask that you take a moment to view our disclaimer. I'm going to show you the stock picks and performance results from this past week that were posted on our website, but remember, we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. So please take a moment to view the disclaimer, and then we shall begin this week's stock review. Alright, let's start off now with the stock positions that were initiated this week. Now these are stock positions that we actually entered into and then closed out, okay? So these are trades that were begun this week and that were concluded as well. Our first one is ADM. Now this had a strategy of 1, 3, and 4 signals generated. So remember, this is where we say it's wise to know which strategy you want to trade, because although you would be entering at the same place for each one of these strategies, each particular strategy has a different time period length in which you would be in the trade. Each one has a different stop placement level, a different exit level. So that's why it's wise to know which one you want to be trading. So strategy number 1 is geared mainly for an intermediate swing trade. Strategy number 4 is very short term. Trades last anywhere from 1 to 2 days. Strategy number 3 is somewhere in the middle. So let's look at this through the eyes of strategy number 3. It was a long signal on the 4th. We went long at 32.03 and we exited on the 8th at 32.90. So we made nearly 90 cents on this trade, a real quick, easy trade. And let's go through the setup here. As you can see, strategy number 3 incorporates our proprietary Bollinger Band setup. This is the Bollinger Bands right here. If you're not familiar with how to adjust and edit the settings for the Bollinger Band, once again, go to the video learning section and we can tell you how to do that. And so you have these nice, smooth Bollinger Band settings the way we do. We alter them just a little bit. But with all of our strategies, the main rule and the main question you always ask yourself is, where is price in relation to the buy-sell line? Now this is our buy-sell line here, the 50-period simple moving average. That's the question you're going to ask yourself regardless of which strategy you're trading, regardless of you're looking for short-term or long-term signals generated, because the answer you'll get is if price is above, you'll only be looking for long setups or going long opportunities. If price is below the buy-sell line, you'll only be looking to go short or for short setups. Now as you see here, according to the rules of strategy number 3, we have our setup bar right here circled in blue. So this is our all-important setup bar, and what this means is if we trade above that setup bar on the next bar only, we can go long. So as you can see, we gapped up a little bit, not a very big gap, but we opened higher, and so we would have entered along on the opening at 32.03. You place your stop just below the low of the sell-off. So you've entered here, and your stop is in place here. Now where do we exit? Well, the exit rules for strategy number 3 are dynamic, meaning that they change. There's nothing set. You don't know where you're going to be exiting once you're in the trade, so you cannot enter an open order to get out. We have to wait until we see price close distinctively above the highest Bollinger Band. Okay, this is why it's important to know the settings of the Bollinger Bands. And today, on Friday, actually, we closed above at 32.90, so we exited on the close at 32.90. We made a quick, like I said, 87 points. And as you can see here, once we got long, it was off to the races, even though it was kind of a little frightening this particular day. When once we got in, it went straight down. The trend did kick back and continue to go up every day, and we finally exited at 32.90. So this is how simple it is to trade these strategies. We're not looking at any news, we're not looking at any reports, we're not looking at, you know, strategic indicators that we've bought, or these high-low points, or you know, support and resistance. We're only looking at the stock in front of us and listening to it and seeing what it wants to do and then following it. Okay, so this was our first trade in ADN. Our next trade was in SWN. Now this was a short signal once again giving us the same signals in strategies 1, 3, and 4, but this time to go short. So we wanted to take this as a short-term play, so we decided to use strategy number 4. This is why it's so important to know which strategy you're trading. Strategy number 4 is specifically designed for trades to capture a short-term move. We went short on the 4th at 33.20. We exited on the 4th the very same day at 32.63, so we made a quick 57 cents. So this strategy is ideal for day traders. As you can see here, the trade took place the very same day. If you were trading multiple shares, you know, 5, 10,000, as some day traders do, you could have made a quick nearly 60 cents in this one trade for the day. All right. Once again, where is price in relation to the buy-sell line? Price is below, so we're only looking for short setups. So we find a setup here. This is our setup bar according to the rules of strategy number 4. This means we can go short if we trade one tick below. And we did. We traded one tick below at 33.20, so we entered short. We placed our stop above the high of the setup bar. And here was our measured move right here. This was our exit level. Now this is a fixed exit level. This is not something that we're waiting for an indicator to tell us if we close above or below. This we know where we're going to be exiting before we even enter into the trade. So you would have placed an open order to exit at 32.63 to cover your short entirely. And as you can see, we came right down to that level. And look what happened the very next day. We stopped and went back up. So this is why this particular strategy captures these quick moves. Now with this strategy, you're not going to be looking for the 3, 4, 5 point gains here. You're looking mainly for something from 25 cents to maybe $1 at most. So with strategy number 4, since we're only in the market from 1 to 3 days at most, you're not going to get a big move. So we would suggest this is specifically designed for day traders. Our next trade was in DE. Now here's once again we had signals using strategies 1, 3, and 4. So we decided to go for the big move on this using strategy number 1 now. Okay, now why do we go to number 1? Because number 1 is designed to keep you in the trade the longest. It's more for swing traders. So strategy number 1, this is where you have to know your strategy. You could have taken strategies number 3 or 4, but if you feel that there's a big move, especially that can happen with larger price stocks, you would go for strategy number 1. So we went long at 69.42, and 3 days later exited with a nearly 4 3/4 point gain. All right, in DE we are above the buy-sell line. Now with strategy number 1, we incorporate our proprietary Donchian channels, as you can see here. See the Donchian channels? So once again, at the video learning section, we have a video telling you how to set these Donchian channels and how to use them. Now here's our first setup bar, meaning we could go long if we trade above that, but we never did. But here's our next setup bar. So this will even be better. We can get long if it works out at a lower price. And we did. We got long here once we opened the next day at 69.42. All right. Our exit level is the highest Donchian channel, which was right here. So we'd simply place a day order each and every day, because this will move up and down at the end of each day. So we have to know where that is coming into the trade. So do never place an open order with the Donchian channels, because you may miss the trade exit by simply keeping your open order in there. You have to place a day order to see where the highest Donchian channel is. And so coming in, we placed a day order where the Donchian channel had been the day before, which is roughly around 74, but we gapped open a little higher, so we got the higher price at 74.11. So we entered at 69.42, exited at 74.11. Nearly 5 points, and we were only in the trade a very short time, actually, just about a week's time, using strategy number 1. As I said, most of these trades in strategy number 1 last anywhere from a week to 3 to 4 weeks. Here's another trade. Once again, we incorporated strategy number 1 in HAR. We went long on the 5th at 33.69, exited on the 8th at 34.70. So these trades are actually a little bit shorter than usual, and this is where we want to tell you why it's important to know which strategy to use. Because usually we always ask you to know when you're entering into a trade, if you're going to be gapping higher, if you're trading strategies number 3 or 4, which you're not in the market for that long of a time, you don't want to actually enter into the trade because you're giving away a lot of your profit. Since the stock may open up maybe a half a point, that's a lot of your profit right there. You may be actually exiting where you're entering into the trade. But if you're using a longer term strategy such as strategy number 1, which we decided to do, it's okay to enter if you have a higher opening. So this is something you have to take into the consideration. Once again, go to the video learning section and watch the video under entries, and we can go into more detail with this concept. But here was our setup bar in HAR where we wanted to enter. So if we traded one tick above, we're going to enter to the trade, and as you can see, we gapped up the next day. And if we were trading strategy number 4, we probably would not have taken this trade. But strategy number 1 calls for us to exit at the high doji channel. So that was okay because once we entered here roughly around the 33.5 level, our exit at that point was up in the 35 points, so a point and a half, 2 points higher. But as you can see, this indicator is dynamic. It moves. It was heading lower and lower, and so once price intersected that highest doji channel, this is where our exit was at 34.40. So even though it appeared as if we were going to have a nice gain had we the doji channel stayed at these levels, it's okay. We still came out with a 71-cent gain. So this was a little risky because we decided to stay long once we opened higher, but it still worked out okay in the end. Alright, here's another trade in HUM now. This was using strategies 1 and 4. We decided to go for the short term here, strategy number 4, but it really wouldn't matter because we would have gotten stopped out either way. We went long on the 6, got stopped out the very same day, lost a quick 81 cents. Okay, we're above the buy-sell line, as you can see. Here's our setup bar for strategy number 4. And we're going to go long once we trade above it. So we traded above it the very next day, on the 6th I believe, at 50.55, and look what happened. The minute we got long, it went straight down. So we got stopped out. Now here's where it's important, as we said, to know not only how long you want to be in the trade, but where your stop placement should be, because we were incorporating stop placement number 1, which is to place your stop just below the low of the setup bar. If you had decided to take on a little more risk and use stop placement number 2, you would have placed your stop down here, and look what happened. We never got that low, so you would still be in the trade, and you'd actually be in the trade with a nice profit, because this is where we closed today on Friday, roughly around 50.85 or close to 51. Okay, so you'd have a nice half-point gain so far on paper, but be that as it may, you'd still be in the trade, and this is where your exit would be at 53.89. So all you need is a nice rally coming here next week, and you would have a nice gain of possibly 3 or 4 points. So this is why it's important, once again, to know your strategy, know the environment of the current environment of the market, because had we placed our stop here at stop placement number 2, we'd still be in the trade and we'd have a nice profit on paper. It doesn't mean that we may not get stopped out eventually next week, but we'd still have a nice profit on paper. But using stop placement number 1, we got stopped out at 49.74 for a quick loss of 81 cents in one day. Okay? So this is why it's important. If you're not familiar with stop placement number 1 and stop placement number 2, once again, all the rules are outlined in the video learning section. Here was our big loser of the week.